Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company which is coming with an IPO this week is Sanstar Limited. It's a company which is involved in plant-based specialty products and solutions for food and animal nutrition industry. And joining me today is Shreyansh Gautam Chaudhary, who is the Joint Managing Director of the company. The company's IPO is opening on July 19th, closes on 23rd. Price between 90 and 95 rupees a share. Fresh issue comprises of 397 crores and OFS of 113 crores. So, in total size of 510 crores IPO. The company is offering nearly 29.47% equity of the post-issue equity capital, and the company is valued at nearly 1731 crores at the upper end of the price band. Shreyansh, thank you for joining us on IPO Adda. To begin with, take us through the company profile you have and what is the kind of business model that you do?
Hi Sujit, good day. First of all, thank you very much for your time, and thank you to NDTV Profit as well. Sanstar, as we have 2 decades of experience. The first factory was set up in 2005 at the Kutch location. We set up 2016 the plant at Dhule. Our cumulative capacity as on date is 1100 tons per day. We are into the maize-based specialty products and ingredient solutions business. We are also expanding at the Dhule location. The products primarily find applications within the food industry. Food is our forte. A majority of our revenue is being generated to sales through food customers. Apart from food, there is a wide array of applications that we cater to, including pharmaceuticals, personal care, and animal nutrition.
Just to get a thing clear, it's basically you use maize to create products and derivatives out of it, and maize meaning makka basically that you do, and its derivatives could be as starch, which is used in food industry, or food beverages, or allied industry which is there. What is how do you source this raw material? Because this is we do have our own production in India, but a large portion of that is also imported from overseas.
The Indian maize numbers have been growing at a very robust pace. The last year numbers were almost 40 million metric ton of maize production in India. So we are very uniquely positioned in the fact that our Dhule plant is at a very strategic location. The nearby provinces almost add up to 25% of India's maize growing regions. And more and more year on year, we are seeing increase in maize numbers growing inside India.
Give me a sense of the kind of sourcing that you do. Is it done solely from the farmers, or you use the mandis or APMC markets through which you buy these?
Yeah, because of the quantities that we source, it is a combination of traders, resellers, stockists. But what is also very good about the company is that almost 17% of my total purchases and 30% of my Dhule plant purchases are directly coming in from farmers. So that is also creating a very healthy ecosystem within the region in the proximity to Dhule plant. And year on year, we are seeing an increase in more and more farmers directly selling to us. In fact, last year we had almost 7,000 different farmers selling their produce to our Dhule factory.
How do you look at the pricing of maize? Because it also has...
The company also has very good infrastructure in terms of maize storage. We have about 50,000 tons of maize storage silos at the Dhule plant. We have about 15,000 square feet of warehousing capabilities at our Kutch unit. And given the possibilities, and given if there is an opportunity in the market, we also create various local stockhouse points during the maize procurement season.
And how about the pricing of the product? Because it is also governed by MSP, if I am not wrong. So how does it work for you? I mean, do you buy it from market prices, or is it linked? You have negotiated prices with farmers or mandis.
So the entire economy is driven on market dynamism. So it is more or less on the supply and demand mechanism that exists in the markets, and that creates the price discovery for the maize markets.
Okay. Give me a sense of your revenue, Shriyansh. You know, in FY24, you had a top line of 1,067 crores, which has fallen from 1,200 odd crores. What was the reason for the fall in top line?
So over the last 3 years, we've grown at a almost 45% CAGR in terms of top line growth. So this is primarily because of a lot of debottlenecking of operations as well and better capacity utilizations. There has been a marginal drop in last financial year, primarily because of some boiler shutdowns in some specific month.
You know, but I see that your EBITDA had gone up and EBITDA margins have also gone up to 9% odd from 6 odd %. So is this 9% margin a sustainable margin?
Definitely sustainable. So the industry itself is seeing the demand for plant and plant-based specialty products is growing both domestically as well as in the overseas markets. If you see, almost 36% of my FY24 revenue came in from export markets. In absolute numbers, we were almost 400 crores in sales on the export side, and more countries are seeing interest in Indian products within our industry. We are adding new geographies, and even in the domestic space, because we are more focused on the food and the food processing segment. So even within the FMCG space where we are catering, they are seeing a very healthy growth in numbers, segments such as pastas, noodles, soups, sauces, as well as a wide array of processed foods.
Okay. Give me a sense of, do you have long-term supply agreement with the key FMCG companies for this?
As a prudent company policy, we generally do not enter into any long-term contracts. The average contract size is from 1 month to a quarterly contract. This is also because of us supplying majorly to food and export customers. We sell them on a regular, consistent quarterly or monthly basis. And it also helps to very prudently manage our raw material positions as well.
Your industry is also dependent on the harvesting season as well, because September to December is the harvesting season for maize. You need to store maize so that you can run it for the next financial year till the next harvesting season. What is the kind of capacity that you have built in with respect to storage of maize? And can you also take us through, what is the kind of growth rate that we can see in this segment?
So Sujit, like I mentioned, the plant is at a very strategic location. There is a lot of ample raw material supplies that are grown in the immediate vicinity. In fact, what has also happened is that within Maharashtra and nearby provinces, we are seeing 2 or 3 crop cycles of maize. So because of the location, we are getting access to maize now throughout the year, which is also resulting in better cash conversion cycle within the industry. And in terms of the infrastructure, given the right prices, the company has invested a lot in maize storage infrastructure. 50,000 tons of maize storage silos are already existing at the Dhule plant. A lot of warehousing we have already created at Kutch facility as well, exceeding about 14,000 square feet of total warehouse area. So the company is ready in terms of infrastructure for handling and storage of maize.
You're raising 400 crores in fresh issue. What is it going to be used for? Can you give us an elaboration of how you're going to use this 400 crores of fresh issue?
So the company has already initiated a 200 crore expansion. We are adding 1,000 tons per day of capacity at the Dhule plant. So portion of the IPO money, 180 crores, will be going into the funding of the new capital expenditure at Dhule. The company will be increasing the cumulative capacity from 1,100 tons per day currently to 2,100 tons per day. The expansion works has already commenced. We are well slated to complete and commence the commercial production by June 2025.
And
100 crores will be also towards repayment of existing debt on the books, and balancing figure will be on the GCP portion.
okay, give me a sense of the working capital requirement that you have, because a large part of your harvesting season comes between September and December. While you said that higher productivity and 2 or 3 crops are being seen, but a large portion of that inventory that you need to build up is in that last 4 months of the calendar year. What is the kind of normal working capital requirement that you have?
So in the FY 2024, our cash conversion cycle was 45 days. That is purely because of the location that we are sitting. The plants are in the raw material region. Also for the fact that majority of our sales are going into food and FMCG and processed foods customers. So these are customers who typically pay within 15 to 30 days. So this helps to maintain a very active cash conversion cycle on the books.
Who would be your top customers? If you can give us some names and color to it.
So we are selling to large customers in Malaysia, in Indonesia, in Vietnam. So these are typically customers who are among the largest food companies in these countries.
And in India?
Just to give you an example. In India, we supply companies such as Hindustan Unilever.
Okay. Give me a sense of your export market potential that you have. 35% of your revenues are coming from export. How big is that market for you? And once the capacity goes on stream in June of 2025, will that augment your export capability?
Yeah, so Sanstar has created a very niche name for itself in the export overseas market. There is a lot of acceptability for Sanstar products within the food segment in overseas markets. The brand has already been established. Post expansion, we aim and we hope to maintain at least similar export percentage, 35% in terms of total top line. So we aim to continue the export story as well. The demand is very nice in the export markets. The markets are increasing. We are seeing new geographies that are coming to buy from India as well. So the potential is definitely very nice in export markets.
Give me a sense of how demand has been in India, because in the last 1 year we've been hearing about this rural slowdown, consumption has been hit a bit. Many of these products are used in some of the high-end products as well, like beverages and others. Have you seen some kind of impact of that slowdown on your books?
Not really, because what is also happening, Sujit, is that we are also seeing a lot of new applications that are coming in for our products, for the plant-based specialty products that we make. We are seeing demand coming in from new food segments. Even if you talk about our products are raw material for a lot of fermentation applications. Our products are used for making the specialty vegan foods, from vegan leathers. Even on the personal care segment, we are seeing new demand coming in from companies now replacing talc and moving to plant-based specialty products because of better environmental and load and better performance characteristics. We are seeing new applications also coming in, such as biodegradable packaging, just to name some.
Shreyansh, it's a pleasure talking to you today. Your IPO is opening on July 19th, closes on 23rd of July. Price between 90 and 95 rupees a share. It's a fresh issue of 397 crores and total issue size of 510 crores. That prices your company at a value of 1731 crores at the upper end of the price band. Thank you very much for joining us on IPO Adda today.